Welcome to the Sunmall podcast, where we interview the stars of e-commerce. Welcome. Today we have Jay Dolwani, who used to be the CMO of Winc and is currently the founder of The Starters, the premier place to find e-commerce freelance talent. So the first question, Jay, I have is that you kind of had a background. You were in consulting. You were in a fast-growing startup like Bird. What were some of the key lessons you learned there, and how did that help you when you moved into e-commerce?
Yeah, I mean, when I was early on in my career, what I was optimizing for was continuous learning. I wanted to learn as much as possible, as quickly as possible. I knew one day I wanted to become an entrepreneur, and wanted to prioritize learning in the early days. So I started in consulting. I did massive healthcare transformations at Deloitte Consulting for a little bit. Over there, of course, learning client relations, how to deal in ambiguous scenarios, and all the traditional soft skill consulting skill set was incredibly helpful and a great place to start my career. Ultimately, I wasn't passionate about healthcare, nor the coast to coast travel that consulting brought with it. I wanted to be a little bit closer to my work, be able to see the impact of that work in real life, and close to the consumer as well. So I went to Bird, which at the time was the fastest growing startup in the country. It was the first startup to reach a unicorn $1 billion valuation, and it was an incredible ride. The first 4 months, it was such a culture shock coming from a place like Deloitte, where I'd worked with Fortune 50 healthcare companies, to a lean, fast growing startup at Bird. I almost didn't fully fit into that culture. I almost left a few months in. But as I grew to embrace it, a figure it out mentality, a get it done mentality, I really enjoyed my time there. And what I really learned there was resourcefulness, how to do a lot with a little bit and how to figure things out, even if you don't have the background or experience. And that was an incredible experience. And I think everybody came in with that same mentality, and we were able to help Bird grow through that. Fair was very similar. I went to Fair to take on a leadership role, leading their customer retention efforts for their rideshare offerings. I was able to, number one, for the first time, to get into the space of marketing and really understand customer retention, implement A/B tests to help grow retention efforts. And from there, I went to Winc, which is where I developed the full e-commerce skill set. But definitely a variety of learnings from Deloitte Consulting to Bird to Fair, as well as Winc, which has helped me in my entrepreneurial journey over the last few months.
That totally makes sense. Learned a lot from each of the stops. Maybe we can talk a little more about a Winc. So Winc, just for a little background, was one of the premier online wine e-commerce brands, and IPO'd. So one of the things I know Winc did was it had a really unique subscription model. So maybe you can talk about how you guys thought about the subscription model there, how you thought about bundles, discounting, pricing there.
Yeah, 100%. And Winc is a digitally native winery that had one of the largest wine subscriptions in the United States, as well as a retail presence through the brands that we produce and the products that we made. When it comes to purchasing alcohol online, you really have to think through what the incentive is for a consumer to purchase online when they can go to a grocery store, they can get a single bottle, and they could have that very day. And when you're buying alcohol online, especially wine online with several different taste profiles, it's really hard to know if you're going to get what you want. So we had to really address those consumer objections with our subscription model offering as well as our initial offer. So the way that we brought consumers into the funnel was through what we call the palate profile quiz. It's a series of 5 questions that would ask the consumer about their preferences in food, types of wine that they like, to help curate a customized first box for them. That got over the objection of, okay, am I going to like this wine? Is it going to suit my palate? Secondarily, we had a 100% happiness guarantee. If they didn't like the wine, we'd send them a replacement, which got rid of the objection of, okay, what if the wines are actually poor quality? And finally, there was the objection of price. And to get people into a subscription model, we had to offer a very aggressive first month discount, which essentially made that first order break even for us. But what that did is it allowed the consumers to experience the end-to-end Winc funnel. It allowed them to try our products, understand our brand and our marketing a little bit better, and ultimately convert them to long-term subscribers. On the subscription end, we operated on a credits-based model, which was really unique even in the wine subscription space. Typically, wine subscriptions will auto ship a box of 4, 8, or 12 wines to your door on a set cadence, whether it be monthly, quarterly, or semi annually. The way that Winked worked is we actually deposited 60 credits into your account. That cost $60, and you could use those whenever you wanted on the site. That allowed two things. Number one, from a consumer perspective, you actually have to be home to sign for delivery. And we had a lot of missed deliveries, a lot of membership cancellations because a consumer was traveling, they just didn't need wine at a particular point in time, or the wine was coming at a time that was inconvenient for them. So by placing the ordering timing in their hands, they were able to order at a time they knew they would be there to sign for that delivery. That was number one from an operational perspective. Number two, and this is where Wink's business strategy really came into account, we were an omni-channel business. And so we also wanted to develop products that would sell well on retail shelves. So by having consumers come to a digital storefront that would almost mimic a physical storefront, we were able to gather data around what products consumers were pulling off of our digital shelves, what products they were repeat purchasing, that would then inform our retail strategy, which is where the majority of wine purchasing happens. So that was really the second reason for the credits model and bringing consumers to our site to actually select what wines they wanted on an ongoing basis.
That totally makes sense. For the having the giving the consumer the confidence to make that first purchase, and then also for having this credits program. For getting more data, and then B, for dealing with actually getting them to be at home and signing for it. So you mentioned that in store or retail was kind of like a big push for you guys. Any kind of things you guys did to, obviously you got this data. How did you market and try to drive purchases within these stores?
Yeah, so it was really the concept around omni-channel marketing. Of course, we did our traditional, what every winery would do in terms of point of sale assets, in terms of distributor incentives, et cetera, having boots on the ground, events, partnerships. We did all of that. But what made us unique and what I believe could contribute to a really successful marketing strategy of beverage alcohol is the concept of omni-channel marketing. And what I mean by that is having a single dollar of ad spend go towards two main purposes. Number one would be direct response e-commerce conversion, where you're actually getting a measurable return on that ad spend and a profitable return on that ad spend. And number two, all of the impressions that that ad is getting, raising brand awareness so that when a consumer goes to a retail shelf, they are more likely to now pull that product off. Um, it's a great strategy in theory. We ran into a couple of issues. Number one was when we were marketing a lot of our top brands, along with that first order discount that I had mentioned to you, that was really pissing off a lot of our distributors and retail partners. They thought that we were undercutting them, that they were competing with them, and it caused a lot of channel conflict. So we couldn't really do too much of that true omni-channel marketing through Winc.com. What we could do was rely on the customers that we had acquired to trial a product that would then go repeat purchase that product in a store. We could definitely do that, but the proportion of that consumer base is significantly smaller than the tens of millions or hundreds of millions of people that are receiving ad impressions on Facebook. So what we tried to do then was then pivot to brand focused websites. So we developed two brand focused websites for particular brands that we would advertise without any discounts. That way we wouldn't cause any channel conflict and it would be separate from the Winc.com subscription. And that ultimately ended up being our omni-channel strategy, where we had a site for Wonderful Wine Company, which is one of our brands, Better For You, low sugar, organic, and Summer Water, which was our number one rosé brand. So we developed a direct consumer presence for each of those, used those websites to run digital impressions, got direct response return through e-commerce conversions, and also lifted brand awareness and retail sale push through. Another thing that that does is it allows you to go into distributor and retailer conversations saying, hey, we're putting X number of ad dollars behind this product. And we could do that without those ad dollars being a cost center. Instead, it was a profit center for us. It was driving e-commerce conversion as well. So that was really the thesis behind the omni-channel strategy. We started to execute it with summer water for the first time in about mid 2022. Of course, saw some promising results, but at the same time, we're going through a very difficult time in the financial markets with regards to our general cash position and the overall macroeconomic economy. So it wasn't something that I was personally able to see through till the end.
That totally makes sense. Yeah, with the new kind of economy post 2021, everyone had to evaluate the strategies. But the point, I think it was really interesting how you have to be careful with your distributors. You can't do massive discounts online. But advertising for your having separate sites and advertising for specific brands. A gives you revenue on those specific brands, but B at the end of the day you have to sell specific wines in store, and so having those specific sites, helps build presence for the in-store um, situation. Um, so one other thing I wanted to drill in is also, you get your kind of customers going, they pass kind of the first quiz, they make their first order, and but you really have to focus on retention. So were there any kind of particular things you did with data or deeper analysis that kind of helped you with retention?
100%. We approach retention through two angles. One was it's the art and a science of retention, and I actually came into Wink to initially lead retention efforts. So it's really the piece of the business that I'm most passionate about. The first thing that I did, I took a traditional consultant's approach where I really broke down retention into its component parts. Ultimately, it's not retention that's important; it's lifetime value. Like, what margin is that consumer driving? Is each consumer driving over what period of time? And not only lifetime value over 3 years, 5 years, 10 years, which I know is a term thrown out a lot, especially in SaaS, but because of cash conversion cycles, how quickly was that LTV coming to you? So the time bound in which that LTV was coming back was very important to us as well. And when you break down LTV, it's really just a few things. It's average order value, its gross margin, and its number of purchases within a given time frame. So we kind of looked at average order value, we looked at gross margin, we looked at number of purchases or order frequency, and we developed a set of initiatives that we thought would increase each of those. We then prioritized those initiatives based on level of effort, as well as potential impact on the business, and implemented one at a time using A/B testing on the site to determine things that would be successful to overall increase LTV. So we took a very data-driven, consultant-like approach to that. And every quarter had our set of 5 to 10 initiatives that we were going to A/B test. And if we got statistically significant results, it's something that we would implement. And those small wins would continuously stack on top of each other. The other side is really the art of retention, and it's really looking at your consumer and really starts from acquisition. Like, are you delivering on the promises that you told them when you acquired them? That was really something that we looked at, and what we found out was that we were promising customers a world of wine and discovery and selection and all of these great things. But in reality, the pandemic had actually really impacted our supply chain, and we only had about 30 to 35 products available on the site. And when you think about the different niches of wine palates, somebody just likes white versus heavy reds versus rosés, when you start to break that down into individual categories, the selection becomes really small. So that's something that we noticed, and we needed to make a very large investment in product to triple the number of SKUs we had on our site and ultimately deliver on the goals that we had promised consumers. And that really helped with retention and LTV as well. But of course, with such a big project and such a big investment, that we had to figure out a way to test that hypothesis. So we tested that hypothesis by bringing in external products onto our site. We split the United States in half. Half states got it, half states did not, and we measured consumer behavior over a long period of time. So even though that was more of an intuition driven project, we were still able to find a way to test it in a low risk way before ultimately implementing the long tail there. So the art is really like those big needle moving initiatives, and the science, the continuous optimization, A/B testing are those smaller initiatives that stack on top of each other to make a big difference. And we kind of approach retention and ultimately increasing LTV from both angles.
That totally makes sense. You really want to focus on LTV, make money there. There's going to be short-term wins, and then obviously, bigger initiatives. But I really liked how you guys were, you kind of guys had the, brought in the third party wines there to test out before you guys actually expanded your inventory yourselves. So obviously, Wink has kind of faced some tougher times, more recently. Were there any things you think they particularly went wrong with, or things they could have improved it with, or any kind of key lessons there?
Yeah, I think I'll speak to the macro in terms of what was going on in the environment, kind of what happened there. I'll also speak to personally what I feel like I could have done better as kind of the two categories. I won't hypothesize or delve too much into the rest of the executive team and the management or the board or anything like that. But in terms of like the overall macroeconomic environment, if you think to when we first thought about going public, which was around January, February of 2021, that was really the height of the market. Brands were taking off like no other. Going public, growth was insane, over 100% year over year. You had companies that were doing less than $20 million going public in revenue. You had the SPAC boom. And it really felt like a time in a space, you think about the wine space, where the top 10 wineries in the country have stayed the same for decades. It takes a lot of capital and a lot of time to get there. And we saw it as a unique opportunity to raise capital and accelerate that vision through organic growth and M&A. Having public capital currency as a smaller wine company could have been a huge asset for us to grow both organically and inorganically. And the market seemed ripe. And it was a one-time opportunity that we really hadn't seen before. What we didn't do a good job of was understanding the downside of what if things don't go to plan. And similar to us, lots of other brands, it happened to Casper. You saw a little bit of it happening to other DTC darlings like Warby Parker and Allbirds, although they've held off a lot better than we had because they were a lot larger than we were, where that market didn't last very long. We ended up going public in November of 2021, which, the market was still great. But from there, it started to go backwards. Stock price started to go down. We didn't raise nearly enough capital or as much as we thought we would while going public. We initially set out to raise 75 million. We ended up raising about 20, which was a huge change that we didn't really consider the long-term implications of. And the stock market continued to go down. At the same time, being public was very expensive. If you think about things like director and officer insurance, staffing up of accounting, legal, to deal with things like SOX as well as quarterly earnings, as well as my teams personally, like engineering and analytics that were really focused on SOX compliance and delivering data for quarterly earnings reports and the S1 versus actually focusing on the business. And as a lean team, the opportunity cost of that can't be understated. So a lot of things happen at the same time where I think if we had gone back 12, 18 months in the past, we would have not gone public. And that was a huge learning opportunity. Personally, I missed out on a couple of things myself. When I was growing my team, as we were flush in cash, as we were going public, I grew my team significantly by the dozens. I went from managing a 2-person team to a 40-person team, going from director of retention to chief marketing officer. And I was really setting us up with the thought and with the intention that we were going to be able to spend money for a while to get to where the other beverage giants were. And when it came to the initial signals of stock price going down, of less and less capital on the balance sheet, of a very strained organization, I think though at that time, I could have definitely done a better job of pivoting the direction of the organization a little bit quicker in a path to profitability, whether it be through layoffs, through focus, whatever it may be. I don't think I reacted quickly enough, and that's a learning that I'll take with me in the future. But the biggest thing that I learned during my time there is how companies should grow sustainably. We see so many companies go through the constant hiring to layoff cycle, very similar to the boom bust cycle of the overall macroeconomic environment. And in e-commerce in particular, you have those cycles within a given year. As you think about e-commerce businesses doing well and staffing up for Q4, Black Friday, Cyber Monday, And then typically, as you enter into the spring and summer, for most businesses, it's a lot slower. So they have cyclical needs within a year themselves. So that was really the biggest learning that I took away, was really from how to hire, how to grow a team sustainably, and how to really evaluate the true downside scenario of anything, even when times seem great, and be prepared for that. So those are the things that I'll kind of speak to in terms of the macroeconomic environment and where I could have gone better. I'm sure there was a lot of other things behind the scenes that could have prevented a bankruptcy and fire sale, but not something that I'll speculate on.
For sure, and it was the market itself, right? Almost every DTC brand, is having a bad time currently. But I think your point here about having, the flexibility, there's always going to be ups and downs in the market or even in the seasonal change in e-commerce. So maybe you can talk about, how that kind of inspired the starters, the rationale there, and just kind of a quick intro on the starters.
Yeah, definitely. So the Starters is a freelance talent marketplace, pre-vetted marketers, creatives, and technologists built for the needs of e-commerce businesses. And I got the inspiration for it during my time at Winc, where two things happened. Number one, as I said, we hired significantly for a ton of initiatives and then had to go through several rounds of layoffs just 12 months later. I think if I had staffed my team using top tier fractional talent for certain roles, it would allow us to test in a leaner, more nimble way and avoid the hiring to layoff cycle that we experienced. That was a huge strain on the organization, bad for the customers, bad for employees, and bad for us as a company. And I think that was a lot of it could have been avoidable by hiring fractionally first, testing out initiatives with fractional talent, and then hiring full time when the time came right. A second thing that I realized was that when we went through all of those layoffs, we still had to figure out a way to operate the business in a cheaper, more affordable way. And I figured fractional talent was the best option. But when I looked at the market, on one end of the spectrum, you have Upwork, where it is so hard to find good talent. And I'm sure every business owner or operator knows the pain of scrolling through Upwork profiles, talking to a lot of people, and entering into a terrible engagement. On the other end of the spectrum, you have marketing agencies or staffing agencies that promise to quote unquote pair you with the perfect marketer or person for your project. But the way that they operate is that they actually double or triple freelancer rates before pairing them with brands. And those commissions, in my opinion, are obscene, and I think makes it more expensive than hiring someone full time in the first place. So I wanted to create the starters to be best of both worlds. Thoughtfully curated, pre-vetted talent without the insane commissions or markups that a staffing agency would give to you. So the way that the starters works is it has the convenience and ease of use of an Upwork. You log into your profile, you can browse from our pre-vetted, curated selection of talent, and you can reach out and hire someone without any commissions or fees on either end of the spectrum. Instead, we operate on a membership model that brands pay for access to the network that allows freelancers to keep their entire pay and allows brands to pay much less on an ongoing basis and ultimately make it a lot more affordable. So the starters is just one person bootstrap show, but we launched about 3 months ago, and we've seen a really great amount of traction. We have over 120 starters now on the platform, growing 10 or 15 every week, really just limited by my ability to interview and vet talent. And we've had over 250 brands sign up for the platform as well. So I think there's definitely something in this market that brands and freelancers are noticing, and something that I'm really excited to continue to grow.
That totally makes sense. Yeah, Upwork, it's just so hard to interview people. The reviews sometimes are completely nonsense and it takes forever there. And then, agencies, have a huge markup. So having a model where you just pay, a membership, and you don't have to pay these high premiums makes a lot of sense, but you're still guaranteed the quality there. So maybe a couple kind of specific questions here. So let's say you really like the freelancer you're working with. Is there an opportunity to have like a longer engagement with them? Can you take them offline? How does that kind of work?
Yeah, because we don't charge any commissions or fees, Whether a freelancer and a brand wants to work together on an hourly basis, project basis, retainer basis, or if the brand wants to hire them full time, that's completely up to them. We don't charge any additional fees or anything like that for any of those working models. So a lot of brands actually come to us for, hey, we think we need to get into this space. For example, affiliate marketing, they'll hire an affiliate marketer on a contract basis, say 10, 15 hours a week to get the program spun up. They'll eventually realize that the relationship is mutually beneficial. Affiliate marketing is going to be a growth lever for that brand, and they'll go ahead and hire them full time. In fact, as of a couple of days ago, we've rolled out a new open to full time work feature. We're similar to LinkedIn, but of course in a more curated, pre-vetted way. Brands can find talent on the starters platform that are open to full time work as well, without having to pay a recruiter 20 or 25% of that person's salary, just the $200 a month of the starters membership to access that talent, in addition to that. And don't get me wrong, I think that there is opportunity in every organization for freelance talent, full-time talent, and leveraging a marketing agency, especially when it's in a very specific domain and a very short-term need. I think that the infrastructure around marketing agencies and full-time hiring, as it comes to recruiting agencies, are really built out, but there's a lot of missing infrastructure when it comes to freelance talent. And that's really where the niche and where I'm looking to build in and help e-commerce brands out.
That totally makes sense, right? It's not that you always need freelance talent or you always need full time talent or you always need an agency. You probably need a mix of both or all three. But having a third option for freelance in a vetted way is always going to be helpful, and you can do stuff right, such as test out your someone in the affiliate marketing, and then see if they perform well. That function is needed, and then try to staff it in full time before just staffing it in full
Yeah,
time. Um,
that's exactly right. And it's even like the quality and the type of talent that you can access in that freelance space. For example, if you're a brand and you aspire to have the social media marketing that a Liquid Death has, like you can hire the person that does that for Liquid Death on the starters platform. Or if you notice Aura Ring, for example, has some of the best partnerships with Gucci, with the NBA, and you want that person that facilitated those partnerships, you can hire that person on the starters platform on a fractional basis. So it's really keeping that level of talent that had historically been unattainable for brands or a huge level of investment and making that attainable and accessible in a very affordable way.
that totally makes sense. That sounds amazing. Getting like the social media person from Liquid Death. So, how have you been able to get this talent on the starters?
Two things. I mean, number one, like my outreach strategy has just been what I had just said, right? So taking the brands that are best in class at what they do, whether it be social media marketing, creative direction, copywriting, etc., and finding the people behind those brands. And our value proposition to the freelancers is very simple. Like you're working from home for the most part now. You have 10 to 20 hours a week that you could dedicate to other brands. No more than that because you have a full time job. But you don't have time to go out, search, and find clients, nor do you want to really publicize that you're consulting and working and you're open for additional work. So we give them kind of the privacy of a private membership model, but also the flexibility to be able to freelance at their own rate without any commissions, with brands that really align with their goals and the type of brands that they want to work with. So we really solve all of the problems that would prevent someone that has a full-time job otherwise, or even freelance or consults full-time, from taking on additional clients. If they were to go to other options, for example, they create a profile on Upwork, they would have to take on a lot of very, very low value, low cost projects to build up their review base, if they could find them at all. And then still, it's a race to the bottom in terms of rate. If they go to a staffing agency, a freelance staffing agency, that staffing agency will convince or almost force them to take a rate that's significantly underneath their market value, and then double or triple that when pairing them with a brand. So we really solve all of the problems that a really top tier freelancer or potential freelancer would face when coming to the market. And that's how we've been able to acquire them. So it's really a combination of targeted outreach, as well as solving all of the pain points that they could possibly have. And we've gotten a great reception from freelancers and potential consultants where we want to keep this curated and to the best of the best. So we do have to say no to a lot of people. But going through and vetting as many people as I possibly can on a daily and weekly basis to continue to add to our roster.
That totally makes sense. And there's a nice synergy there. I think you mentioned, right? Because you're personally vetting and, hiring the best of the best. Um, Everyone knows the talent is really good, so people don't, the freelancers don't have to, waste time trying to build up their profile or, competing and try to stand out from the noise. Are there any kind of, particular roles or kind of things you guys offer that you guys are really good at, and maybe things you guys are looking to add or but are not quite there well in terms of the types of roles you guys offer?
Yeah, so right now we do marketing, creative, and some technology talent, and we span the full from all the way from individual contributors to executive level talent. So we have, paid search buyers to fractional CMOs, copywriters to creative directors, and data analysts to CTOs. I would say the marketing and creative portions of our talent roster, especially as it comes to director level and below, is really well built out. That's where most of the demand has been for roles like affiliate marketers, paid social media buyers, graphic designers, and copywriters. So that's really where we focus on building out our marketplace. We have less options as it comes higher up: CMO, creative director, chief brand officer, CTO, because the demand hasn't really been there. So I'd say that's one area where we need to be better at finding the demand for those roles, although it is fewer and more far between. And then we'll continue to staff that up. But we want to make sure that we're not overstaffing on the freelancer side, because when freelancers spend the time going through our entire vetting process from interview to a full case assessment to building their profile, there's an expectation that they will get some sort of work coming through in the following weeks or months. So we want to make sure we don't staff up too much. A second area where our competencies are less built out is when it comes to highly technical roles within technology. And by that, I mean engineers, as an example. The reason why we haven't delved into that space is because I'm personally vetting everyone, and I'm vetting what I know how to vet, right? As CMO, I do not know how to vet for an engineer. So I'm not adding that talent to our platform because we will live and die by word of mouth and referral. So we don't have kind of that highly technical skill set of engineers on our platform, but we do have things like e-commerce product managers, Shopify product managers, data analysts who can run cohort analyses or attribution modeling for you. But really, that side it will need to be built out in the future because it is a need that a lot of brands on Shopify and especially Shopify Plus have, is the need for some custom development on that end. But that will require bringing in a partner who is incredibly proficient and a leader in that space to help that.
That totally makes sense. Really focusing on the freelancers and making sure they get work. So really focusing on areas where there's currently demand, and then also really focusing on areas where you have the expertise and you can really hone in and make sure that this person is top notch. Are there any kind of particular case studies or specific roles that a specific brand has found, or someone who's had a good experience so far?
Yeah, I'll give two examples. I don't know if I have permission to name the brands, so I won't name the brands. But one example that I'm really proud of is within the first month of launching, one of our earliest customers came to me and said, "Hey, no one on the platform. They needed a video editor and they needed something done in the next few days because they were launching their product in Sephora, and Sephora needed quality video assets to feature on their site, and no one on the starters platform could turn around that work in that period of time. So I dropped everything that I was doing. I went on LinkedIn and I probably reached out to over 100 video editors. I interviewed about 15 of them within the next 24 hours, looked at all of their portfolios, looked at client referrals, made sure that their work was high quality, and eventually got a couple onto the platform just so that I could share with that one client some additional options She ended up finding the perfect video editor that got it done in time. And then I got a really nice email. Just that, those are the things that keep you going, is those client testimonials and emails that what you're doing is incredibly helpful, and incredibly helpful for their business. So that was one success story that I'm really happy about, that we were able to deliver through excellent customer service, even when our platform didn't have what they needed at the outset. A second example is there is a clothing marketplace that's big in Europe that's expanding to the United States. And they're a client of ours, and they're building out their team in a very lean way. So they've actually been able to hire a paid social person, a paid search person, an app store optimization person, and a PR person, all from the starters within a period of a couple weeks on a fractional basis to help them launch in this country. And that is the entire team that's doing that, is directly from the starters. If you had gone to a recruiting agency or a staffing agency for those roles, you would have paid $100,000 plus in commissions. And we were able to deliver that team for that client for just a couple $100 a month. So that's something else, another client case study that I'm super proud of as well. Both of the customers that I mentioned were some of our first customers. So really happy to see them continue to be with us and be happy as a starters member.
That's totally awesome, especially like the first story where you kind of went above and beyond. Personally, found the videographer, video editor in a short amount of time for the customer. That's a really amazing customer service there. And final question on the starters, kind of what is the long term vision goal? Like, where does the starters 5 years from now?
Yeah. I'm really passionate about helping companies grow sustainably. And one of the biggest inefficiencies that I see in the e-commerce market is access to talent, whether that be fractional or full time. I already went through some of the pain points of hiring someone as a freelancer, but even if you think of hiring someone full time, you have two options. One is you post on LinkedIn and Indeed, you get thousands of applicants that you then have to comb through. You put together an interview committee, you put together a case assessment, and then you bring them on, taking hours and hours and hours of your time. When I was hiring full time at Winc, I probably spent 50% of my time for a couple months just focused on recruiting and hiring. That is a big problem. The other option is you leverage a staffing agency or a recruiting agency. And while I think that they're fantastic for specific niche roles, especially executive roles, you're paying 20 to 33% of that person's entire salary just to get matched to that person, which is tens of thousands of dollars in fees that I think is incredibly unsustainable, especially for businesses looking to grow and are earlier in their stage. So I think that whether you look at fractional talent or full-time talent, there's a lot of opportunity to bring the starters platform as an all-encompassing talent platform for e-commerce businesses to help them access the best of the best, that have been pre-curated, pre-vetted. They've gone through all the hoops. So hiring managers don't have to spend as much time, and CFOs don't have to worry about spending hundreds of thousands of dollars a year in recruiting fees. So I think there's definitely, the long-term vision is to help companies grow sustainably through access to elite talent. And we'd love to be the platform that does that.
That totally makes sense. And if I'm a brand and I'm interested, I can just go to hirethestarters.com and I can just view the talent. Is there a way to sign up just for a month, or how do I kind of just get started?
Yeah, you can go to hirethestarters.com. You can browse our entire talent marketplace completely free of charge. If you're interested in upgrading to an account, a paid account to start hiring and see more information, you can sign up directly from the site or shoot me a note at jai@hirethestarters.com, and I'm happy to hook up listeners of this podcast with a free month.
Cool. And then just final couple of questions here. Any overall trends you're excited to about in e-commerce?
Yeah, I think a couple in particular. One is going to be social commerce. I think that's super interesting, especially as it pertains to how that will impact the influencer marketing landscape. I think that over the years, and I had interviewed one of the influencer marketers on our site about this. Influencer marketing has gone through a little bit of a rise and boom, a rise and close to bust now, where influencers were really trusted, to provide recommendations on products to buy, things to do, etc. That market has now gotten really, really, really saturated with brand and paid partnerships. And the social economy, and just getting referrals from friends and democratizing kind of influencer partnerships, I think is a really interesting step. So whether that be referral programs, whether that be through customer generated content, or just individuals being brand partners, I think there's a lot of interesting. There are a lot of interesting trends there. I think, of course, the second is seeing what AI will do to the talent space in e-commerce. I don't think jobs will be replaced, but jobs will become more efficient. So if you are a copywriter, you will be able to save 50 to 75% of your time. Uh, AI can help with writer's block. If you're a graphic designer, there are tools to help you with your job as well. So I think that it's going to definitely shift the talent marketplace, the talent landscape in e-commerce. So I'm excited to see where that ends up. But I don't think it's going to be replacing jobs. I think it'll be making them more efficient, and again, help companies grow a little bit more sustainably.
That totally makes sense. AI will definitely supercharge the capabilities of everyone with like stuff like ChatGPT, and some of the image models. Um, Final
Exactly.
question: any kind of cool shopping experience, online or offline, you've had recently? Like you were really impressed with the product or the branding? Um,
Yeah, I mean, one product that impacts my day-to-day life, and I don't know what I would do without it, is Eight Sleep. It is a smart mattress that heats, cools, keeps track of your some of your metrics like heart rate variability, sleep type, sleep quality, etc. I used to be a really hot sleeper, and now I turn the Eight Sleep down every night, and get a much better night of rest. So that's probably been the product that helped impact my life the most, that I kind of found out about through the direct to consumer and e-commerce community.
Thanks for listening to this episode of the Sun Mall Podcast. Please make sure to subscribe.